This is Rod Kusin Spoon for Risk on March 14th, 2019. All times on the chart are Central Standard Time. All right, the market has moved long here, but we're going to short this. Here's why, right there. That bar on the premium down here is a naked bar. And this little rally up is smoke. This is coming back down. Now, look at the move here. This move up on the premium, followed by a move up on the premium again to a higher average. What we want is this to move higher still, or at least tag that high and be lower on the premium. That's when we short. Again, here, we're still moving up. We're still moving up. We're still moving up. Although granted a bit of a retracement, we're still long. Now, we are not likely going to short this yet. We could expect another, we're going to tag that high. It may come down again. We've got to go up one more time after the dip before this is going to look short, because we just don't have the pattern yet. So if you got long in here, you're holding that trade up to this high, 1775. But now as you see this dip in the premium, if you're long already, now you got to tighten your stop, because this looks like it's going to dip a little bit. And there we have it. Now look at where the premium is. We're way below. So that's the pattern for the short. That's the pattern. Now, we're not saying that it necessarily has to be under the slow moving average. No, it just needs to be divergent, and it's quite divergent. But frequently when we see this happen, we'll see this move up again. So while we go ahead and we take the short, which we did, it may be that this will move up and we'll have to average in again. We'll just have to wait and see. Looking at our volume profile from the overnight market and into this morning, moving up to 2050 where we just hit 2075, filling that little divot of volume in here. That might be a good place for this to short. Well, we shorted it up there, but I don't really like what's happening here. This bar on the premium is particularly suspicious. So this may not come down as much as we expected it. We'll recap later. Okay, we're back to recap what we were discussing this morning and show you our automated trades and what we were expecting this morning after the long was a short. It was all based on that bar. That's the primary bar that gives us our heads up that this was going to go short. But before that took place, by reading the premium properly, you saw that all of this was long. So getting into a long trade right in here and riding it up to the top made sense. Once we got up there, all right, right up in here. Just look at what the premium is telling you. Okay, premium is now going short. There's your perfect opportunity. You can obviously see the average divergence from these highs to this high. You short this at the top or anywhere up here, and you write it down to at least where the premium said you were going to go down to, which was 28.1175. Okay? When you come down to this point, all right, you're not there yet, but you get another big bar, which just confirms that this is still going down. And so finally in here, 1125, look at what starts to happen to the premium. We start moving up again. So you're going long in here or you're exiting that short trade. Either way, it works. It's that simple. You read the premium. Now let's look at some of the automated trades. Here the premium is going long, so we're getting long trades in here. We're riding it up. Premium starts to go short up here. You could have gotten in earlier, as the premium made that clear. These arrows represent the premium. The actual short trades from the automated system look like this. These are actual strategy trades. And again, you're writing this down. Then as you get to the bottom, what happens? The strategy goes long. You don't get better than that. That's perfect. That's just literally perfect. Before the close, however, we started getting some short trades just to show you. So once again, just to show you the profile, as the market moved up, there was a little divot in here that we mentioned previously. That's as high as she went. That's where we needed to short it. That's where we did short it. And we took our profits right where the premium said we were going to go, which was 1175. Now, for those of you that are working with our system, we have available, and you can do this on your own, all of the strategies which we have coded up can be combined into one strategy. You don't have to have all those strategies on your workspace. You can have just one. You got to code it a little differently so that it will bring up all of these different conditions. But this is how we've done it. We've taken all of these individual strategies and all of these various conditions. So for example, just hypothetically, strategy 6 is based upon these primary conditions. So condition 19 can become part of a series of conditions that make up one strategy. So for example, if I said condition 17 and condition 19 and condition 21 and condition 23, all right, I can put all of that into one and make it a specific condition. And that then allows me to avoid having too many strategies open at the same time. Now, how you want to code it, that's up to you. But it's very simple to do. And once again, one of the ways to do that, each of these conditions that make up a strategy, simplest way would be to just say, all right, condition 9 is strategy 1, condition 11 is strategy 2. So just say condition 9 and condition 10, or pardon me, condition 9 and condition 11 and condition 13. and add them all up, and it makes one specific condition, which constitutes all in one. Okay. All right, so that completes our video for today. Some nice trades, very predictable if you know how to read the premium. That's what we teach, and we haven't found a better system out there. I'm Rod Kusanen, Spooman for Risk.